So at this point, we're going to jump into Chapter 4. We're going to talk about how things actually get recorded in the official books and records of any company. Okay, books and records. Remember, a big part of accounting and what we're trying to do here is keep the records, a running history of the company. So remember how we started where we were writing transactions across the board and we were putting them in columns and calling those categories, and then we started calling the categories accounts, and we started using T accounts. Well, tonight the T accounts go away. No. Okay? So we're going to leave T accounts behind, and we're going to start recording things in two places. The first place that every transaction gets recorded is in the general journal. Okay? Everybody here has had an English class where the instructor had you keep a notebook, and every day you'd put something in it. It was a journal, right? Anybody done that? Okay, so you'd start at the top of the page and you'd work your way down, correct? So the first entry was from day 1, the second entry was from day 2, the third one day 3, and so on. What we're going to do is, in the general journal, is record every transaction of the company just in sequential order. So the first transaction we always have when we start a new company is what? Owner invests capital in the company. Yes. Go ahead.
Will we ever use T accounts again?
Yes, it's a great tool, and it's easy for me to visually represent things in T account format, so you'll see them. But is it the way we officially keep the records of a company? No. Okay? You're going to see it's a great tool, though, because the general journal and the general ledger, the second one, both sort of kind of look like T accounts. Okay? So we'll get there. So we're going to keep all the transactions, and we're just going to have this journal where we keep them in sequential order. So we'll record the capital investment, where we purchase equipment, where we pay rent, and we'll work our way down a page, one after the other after the other. It doesn't matter what account they go into, you just keep them in sequential order. Okay? This is referred to as the Book of Original Entry because it's the first place things get recorded for your company. Bless you. Okay. Compound journal entry is a new term. Have we talked about that? Remember how we did entries up here where we bought equipment, we paid for half of it in cash, and we paid for the other half with accounts payable? It's a three-legged entry. That's a compound entry because there's more than one debit and one credit. In that case, there were one debit and two credits, right? Okay. This, I think we've seen before, but this is the accounting cycle, right? And just to show you where we are in the cycle, we've done this a lot so far. We've been through 3 chapters, and the entire first test is really about this. We analyze transactions. When something happens, say the owner makes an investment in the company, even tonight when we were going over the test, I said, what 2 accounts are affected, right? Analyze it. What are the accounts that are affected? Which one's the debit? Which one's the credit? And how much? Then we're going to journalize the data. So far the journalizing has been we put it in T accounts. Tonight we're going to use the general journal, and we're going to then post the data. Okay? So we're on to step 2. Good? Nod yes or nod no? Okay, otherwise I just keep repeating. And that's bad, right? Yes. Okay. A journal is like a diary. It's just a list in sequential order. There can be multiple types of journals. We're not going to worry about the other journals until we get past the next test. So the only thing you got to remember for now is the general journal. Everything goes in the general journal. Okay? They're entered in chronological order, and here's what it looks like. It's just a sheet of paper. It says general journal at the top, and by golly, it's got a page number, because you can have lots and lots of pages in any given month. Most of your accounting records have a similar format. Date. See, we've got some headers here. Date, a description, something called a posting reference. Let that go for now. And then debits and credits. So if you stop and you focus on this side of it, what does it look like? T account. Right? There's an old friend. So this shouldn't be too scary. All we've got is a date and a description to go with our T account now. Good? So we're going to list every transaction in order. And you always start with the date. Now, there's some shortcuts you can take here. The first one on a page, you got to enter the year, the month, and the day. The second one, I can just enter, if it's still in November, just the date. When the month changes, you put December 1. When you go to the next page, you got to get the year and the month up there again. Okay? So there's some shortcuts that can be had here. The description is the account, and we always start with debits, right? Debits, credits. The convention is we always start with debits. So what account are we going to debit? And then we figure out the amount, and we record it. Okay, so what's going on here? Cash is getting debited. If we debit cash, which direction does it go? Increase. Good. Okay. The account that's going to get credited, notice it gets indented a little bit. Okay, so here's Jason Taylor Capital. And we enter the credit, but notice it goes in the credit column. So your debits all line up out here. Your credits all get indented slightly, which matches the debit and credit columns over there. So it makes it visually easier to follow and read. Everybody good with this?
Yes.
Okay. Mothra's gone. We're good. Okay. There's one more thing that I want to throw in here. For those of you who have read the chapter, it's a description. Okay? Obviously, what's going on here is we're starting a new business and the owner's putting in money to start the company, right? Now, in terms of the description, notice it gets indented just a little bit more. So it's offset from the credits. You don't get it confused with the credit. More detail is better. This is part of your audit trail so that you can follow back to the original documents if you had to look something up. So if you've got an invoice from a customer, you know, or not a customer, a supplier, a vendor is going to bill you and they send you an invoice, get the invoice number in here and who the vendor is. That way if you ever had to go back and find it, you could. If you're invoicing a customer, get the customer name in here and the invoice number. If you're writing a check, get the check number in here. Okay, more detail is better. Yes, ma'am.
Even like for telephone expenses, would you want an invoice number?
Typically the invoice number they put on there is your phone number, so it's a little tough, but yeah. Ideally, yes, you would have a unique invoice number. Okay, questions on this? It's really just a format. You know, I got a date and a description, and I'm showing debits and credits, and then I've kind of got a T account over here, but I'm showing both my cash account and the effect on my capital account. So this is in English, writing down and telling everyone what the transaction was and what happened. Okay? Good? All right, let's do a whole bunch of them then. Yeah, more detail in the description, the better. Let me see if I can get that little box to go away. No. Now I can't see what I'm doing. All right. Okay, so the steps are, take a look at whatever the document is that's causing you to want to make an entry. Typically, you know, it's an invoice or a credit memo or a check that you've written, and look at it and figure out what are the two accounts, or what accounts are affected, by how much, and do they get debited or credited, right? Which direction are they going? So identify the accounts, figure out what accounts are affected, determine the amount, is it a debit or credit, apply the debit and credit rules, and record it. Okay? Pretty straightforward. So we're doing this instead of doing T accounts. This is the formal method of recording those first transactions. Or the first place you record all transactions for a company. All transactions. Questions? Everybody's quiet. Yes?
And after you're done with recording all the transactions in the general journal, can you do a T account after to just, see your balance?
It will take you extra time and it will be unnecessary.
Okay.
So let's just kind of go through the next couple of concepts here, and I'll show you why.
So these are just like...
This replaces T accounts. This is the first place you're going to record every transaction for the company. And you just record them in chronological order. So I'll skip a few lines and do the next one, and then the next one, and then the next one. Go to the next page and just keep going. And it replaces recording it anywhere else. Okay? You're going to find that you're doing a lot of work to do it manually like this, so keeping it as simple as possible is important. Yes, ma'am?
Is this for like quarter, a month, forever?
This is for whatever your accounting period is. Most businesses, it's a month. Some small companies only issue quarterly or annual financial statements. Okay? But when I'm talking about this, I'm talking in terms of a month. Okay? The general journal, though, goes on forever, because you'll do this month and then the next month. But what you'll do is you'll come to the end and you'll go to the next page and say, I'm starting a new month, and off you go. Okay? Okay. So here's another look at, same thing. This is what we were just looking at. Here's another one. Let's look at what's going on here. November 7th, the following day. Went out and bought some equipment, right? Debit, because it's all the way to the left. How much did we pay for it? 10,000 bucks. Indent cash. How did we pay for it? In cash. And we credit cash for 10,000, meaning cash is going down. Right? So we can read this and tell the story just by reading through this journal. It's just in accounting language. Okay? Purchased equipment, check number 101. Look, they did good. They told us what check number they wrote. So we can tie it out here and follow it back. If I had to go find this, I could go refer to the check and keep looking. The check would tell me who it's made out to, who did I buy the equipment from, all kinds of good stuff. Okay? Next, a couple days later on the 10th, we bought some more equipment. Equipment goes up, debit, 12,000 bucks. Accounts payable. We didn't pay for it in cash this time, did we? We promised to pay them later. So it goes down, credit 12,000. Purchased equipment on account from Office Plus. This one's better. They even got the guy's name in here. And you can't see it, but it says invoice 2223 due in 60 days. So I know who I owe the money to, I know the invoice number it was on, and I know when it's due. Right? You've got to record all that somewhere, otherwise how do you know when you owe the guy money? Good? Questions? Answers? Okay, just check. Okay, notice we're going to skip from the 10th all the way out to the 28th. We bought some supplies. Debit supplies, right? It's an asset. It goes up. Credit cash. We paid for it in cash. 3,000. Purchase supplies. Check number 1,002. Good. What was he doing between the 10th and the 28th? I don't know. But you do these in sequential order. So if there was something in between, it would have to show up on the general journal, correct? Okay. Questions?
This is something you would want to obviously take care of on a daily basis.
Yes.
Any transactions you do during the day.
Well, if you're in a small enough company where you don't have a ton of transactions, maybe you could have somebody come in and record them all once a week. But you'd have to have all those documents, all the invoices and the bills and things, like in an inbox or something, and let them process it. Yeah. But, yeah, company of any size, this is going to take a little bit of time. Okay? here we go. We're debiting accounts payable. If we debit accounts payable, does it increase or decrease? It decreases, right? So we're making a payment on account for something we'd already bought, $5,000, and accounts payable goes down and cash goes down. We're giving up cash. Paid on account to Office Plus for invoice 2223, check number 1003. So whatever we bought back here, we're now making a payment on here, on November 30th. Good? Again, debits, credits, pretty straightforward. Good? Yes?
Do you always place your debits first?
Debits are always first, and they're always right, what is this? Right justified, or left justified, I mean? Yeah. They're always left justified, and then you indent for the credits. So if there were multiple debits, you'd go debit, 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 and then credit, credit, credit. Okay?
Assets are on the debit side?
Assets increase on the debit side, but if you're decreasing it, you're going to credit it.
Okay.
Yes, ma'am.
So if while entering, your debits and your credits, and you happen to miss something, how do you go in? So say you have, all your debits, except for and then you put in your credits, but you forgot, there was one more debit.
There's 3 debits, but you put 2 of them, then you put a credit.
Right.
What do you do?
Yeah.
Are you recording this in pen or in pencil? You're an accountant. Are you recording it in pen or pencil? Pencil, correct. So you could erase it and fix it, but you're not supposed to erase.
Right.
Okay? So, it's bad form to enter a debit after a credit, but is it, going to be the death of you? Are you going to go to purgatory? No, you're not. Okay? So if you do make a mistake and that's how you end up fixing it, that's what you've got to do.
And just make sure it's left justified.
Yes.
Okay.
Okay? And then, of course, enter it in the debit column. Yes. Okay? Other questions? Yes?
Similarly, if the boss next week brings in a pile of receipts from the last 3 months,
Fire him.
that's going to be out of order, right? You're going to just have to be okay with that?
Well, now hang on a second. Here's these receipts, and he wants to get reimbursed for them, or he wants you to pay the suppliers, or what?
He wants to be reimbursed.
Okay, so you're going to record them with today's date. Okay? If it's an invoice from a supplier that's 3 months old, he's been calling for 3 months already. You know it exists. Right?
Or you get the statement.
Or you're getting a statement in the mail somehow, yeah. So, but if the boss wants to be reimbursed once every 3 months, you record it with today's date and you tell him that's the way it is. Okay? Yes?
The example you gave earlier, if you had someone just in a small business do your books once a week,
Yes.
and say, they lost the receipt somewhere, and then you had to go back and then re-enter it, but you had already, it was 2 weeks down the road.
Uh-huh.
Would you just reference it at that date that they gave it to you back to?
Well, you could do, I need one that says an invoice number on it. Right, here's this one that's got an invoice number on it. I love this screen, by the way. It's kind of short. So say you bought something, the company bought something, and they lose the invoice, and you don't find out about it until you get a statement 3 weeks later. Okay? That's basically your question. So when the day comes, whatever that day is, you're going to record it on that day. You're not going to backdate this.
Okay.
So whatever today is, today's the 28th, November 28th, equipment, accounts payable, purchased equipment, invoice, whatever. Date of the invoice was this, due in 30 days. So you kind of have to make up for it in the description. But you are going to record it with today's date. So once you're into this format, you can't backdate things. Okay? Questions? Other questions? Okay, here's another fun one. We're going to prepay some rent, right? We got to go find a place, prepay rent. It's an asset, debit. How do we pay for it? Cash, credit. Prepaid December and January's rent in advance, check number 1004. How many months is this for? 2. How much is the rent each month? $3,500. Yes? Okay. Okay. Here we go. We provided a service. We invoiced somebody. So they paid us in cash, debit to cash, credit to fees income. Debit's always first. Credit to fees income. Performed services for cash. What's missing here? We're going to bill this guy somehow, right? He's going to get a receipt of some fashion. Invoice number 1 or 1001 or whatever it is. It needs to be on here. Okay? If it's accounts receivable, who is it needs to be on here as well as the invoice number. Because otherwise, how do you know who to go call up and say, hey, you haven't paid me yet? Right? Okay. We'll get to that. We'll get to more detail on that after chapter 6, but for now. Here we go. Fees income, accounts receivable. This guy didn't pay us in cash, so the debit is to accounts receivable. Credit to fees income. Performed services on credit. Again, where's the customer's name? Where's the invoice number, right? Good. This is pretty straightforward, I hope. Questions? Answers? Okay. Here's another one. I like this one because customer comes along and pays us. We invoiced him a while ago. We gave him terms. He could pay us in 30 days. So now he's sending us the cash. Cash goes up. Credit to accounts receivable, so it decreases. It doesn't affect fees income anywhere because we've already recorded it as fees income, right? Okay. Received cash from credit clients on account. Well, I want to know who and how much so I can keep track of what their running balance is, right? Okay. Here's an expense, salaries expense. Expenses are always debits. Paid for it in cash. Cash is the credit. Paid salaries on checks number 1005 and 1006. We only have 2 employees and they got paid $7,000. Good for them. Right? Yes, ma'am.
On the previous slide,
Yes.
that one there, obviously they're probably not paying cash, right? They're paying the check or something?
Well, no,
Some sort of
someone's, one of our clients is giving us cash. We've already performed the service long ago and we put it on account. Now they're making the payment.
What if they pay with a check? Or
Well, it's a check. You treat it as cash. It's a negotiable instrument, same as cash.
just document somewhere that they...
That it's check number so-and-so that they paid on. Yes, absolutely. That's a good point.
Would you then put like credit card number and delete the last 4 digits?
I wouldn't put their credit card number in there.
Yeah.
But like when you run them through the machine, it gives you a transaction number or something. I might throw that in there. Yeah. Yes.
So do you say then that you would then put like the exact amount they still owe, if they still owe money, or just an
No,
invoice
I would
number?
just show that they paid this much on account.
Okay.
Later on, I'm going to show you where we keep a running balance of what everybody owes us.
Okay.
Okay?
So we'll just have like an invoice reference or something.
Yeah. Anybody else? How about you quiet people? No? All right. Go. All right, here's another expense. Expenses are always debits. Paid for it in cash. Paid monthly utility bill. Check number 1007. Good. Straightforward. What's going on here? Yeah, don't read the top. But the owner's taking money. So we debit the draw account. Cash goes down. So we credit cash. We wrote him check number 1008. That way he can pay his personal expenses, right? Okay. All right, so the first place, the book of original entry, general journal. Yes, ma'am.
So when you're giving a refund, you're debiting fees income and crediting cash?
Typically, you'll set up an account called returns or refunds, and you will debit your refunds account and you will credit cash. Okay?
On the homework, I think we do a couple of refunds, and I think we do.
I don't think we do any refunds until we get to like chapter... There was? Okay. Not fair. Okay. So for now, if you just debit fees income, that's okay. But when we start actually selling merchandise, when we have inventory in the second half of the class, there's a separate account, and we will use the separate account, okay?
So you debit fees income and credit cash?
Credit cash if you're writing him a check right then and there.
No, in the homework, it's, so I bought equipment, but something was broken on it, so I'm returning that equipment to get my cash back.
How does that affect fees income at all?
It's not fees income.
Not. It's not.
cash and.
Hang on. I had a pen. Hang on. Let's come over here. We're going to buy some equipment, okay? So we're going to debit equipment, say $20,000. We're going to pay for it in cash, right? $20,000 credit. Good?
Yes.
Okay, basic general journal format here. I just don't have a date and a description. Everybody understands what I'm doing? Okay, so we're going to return this because there's something wrong with it. My entry is the reverse of this. I'm going to debit cash for 20, and I'm going to credit equipment for 20. Okay? And maybe you were asking about something else, but this doesn't affect fees income.
No, it's, we sent them something and then they didn't like it, so.
The lost package.
It's a lost package and they
want to be refunded for it?
yeah.
Did they already pay us for it, or is it on account?
Yeah, but it's.
Okay, so you're going to have the same thing. You're going to have cash, debit for $100, fees income for $100, and if you were just like that, okay, debit, credit. If you reverse it, you've got fees income, debit, and cash, credit for the same $100.
And that's for a lost package?
Well, I have to refund him, don't I? Based on what she's telling me, I'm refunding somebody for lost package, returned goods, whatever it is. This is assuming I'm the one who files the claim with UPS. If it's on them and they file the claim, then it's on, I don't have to refund them the money. They got to go after UPS. But that's more of a legal issue. Okay?
The hardware business, and the business is the shipping business.
Okay.
And we lost credit.
We lost it? We don't lose anything. That's not possible.
Well, company
Okay.
lost.
So you're going to have to refund it just like this. You reverse the fees income and you write them a check. So cash has to decrease, okay? Can you see this?
And if it's
All the way down here.
on the accounts payable too?
It looks like it's pointing way up there. Okay. Can you see me now?
Unfortunately.
Heckler, always a heckler in the room. All right, other questions? Does this cover what you're asking?
Yeah, and you just do the same if they paid on account.
If they paid on account instead of cash, it becomes accounts receivable. Okay, you just replace cash with accounts receivable, right? Because if we sell on account, instead of getting cash, what do I get? I get AR, so I debit AR and a fees income. And if I reverse it, I debit fees income and I credit cash or credit accounts receivable to reduce the receivables balance to zero. Okay? Good? Okay. So that's the general journal. It's the first place every transaction gets recorded. Remember the guidelines here. It's a journal. It's in sequential order. It doesn't matter what account, you're just recording everything one day, one transaction after another in date order. The second place things get recorded is called the general ledger. It's also referred to as the book of final entry. This is the last place it lands. It's nice to know there's only two places to go, right? General journal, general ledger. So we're going to post those transactions from the general journal into the general ledger. The general ledger is different than the journal, but it's very simple. The journal is date sequential order. The general ledger is account order. So here's one account. It's its own ledger. Here's another account. So you have cash as its own ledger. Accounts receivable is its own ledger. Equipment is its own ledger. Accounts payable is its own ledger. Okay? If you want to think of it in terms of a T account, the cash general ledger account is one T account. And the equipment is one T account, just like we've been doing up here on the board. Okay? And they are, again, very similar, just the T account is a nice visual representation that's easy to do on a whiteboard. So the next step in the accounting cycle is posting the general ledger to the general journal to the general ledger. I have to be precise here, because they go in a specific order. Posting is the fact that you take the transaction and you put it in the general ledger that it belongs to. So if you remember back over here, notice we have two accounts that we have to deal with here. The drawing account and the cash account. So how many accounts are affected? Two. So I have two general ledgers that I have to go to. Two general ledger accounts. Okay? Go, 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 go. Yes, we're all the way over there. And I'm going to tell you a little secret. So that's step 3, is posting to the general ledger. My secret is prepare a worksheet. Can you do a trial balance? We've done a trial balance, right? You can already do this one. Because that's really about all it is. But that's next week. That's my bait to get you to come back, right? So a general ledger account looks a lot like the general journal with some minor differences. And instead of saying general journal across the top, it says account and the name of the account. And then remember when we talked about chart of accounts, each account gets a number. So the number goes over in this corner. It doesn't have a page number like the other one, but it just has the account number. Okay? Then, some pretty standard things. Date, description, posting reference, debit, credit. So far it looks just like the general journal, doesn't it? They're identical. Okay, now I'm going to really mess things up. I'm going to throw the twist at you. There's another debit and credit. Oh my God, right? This one is where you keep, this one is this transaction debit or credit. This is the balance in the account. This is just like you're totaling a T account every time you do a transaction. That's all. Okay? So is it terribly different? No. It's very, very much the same. But I'm only going to record the transactions that affect cash here. So if there's an entry that affects fees, income, and cash, like we talked about over on the whiteboard, only the cash part of it gets entered here. The fees, income part of it gets entered in the other general ledger account for fees, income, which will have a different account number. Everybody with me? Good. Okay. Let's see. All of a sudden, John Madden shows up and starts circling and drawing lines and stuff like that. Okay. I'm going to go over this. Oh, we're skipping that. Okay. Here we go. General journal. This is from a few slides back, right? We bought some equipment. We paid for it how? Cash. Good. So what account is this? So I'm going to record this line right here. Am I going to record the cash part of it? No, doesn't go here. Good? Everybody with me? Okay, here's where the magic starts, right? Nothing up my sleeves. Okay, notice I have a date here. The date comes down and gets repeated in the date field. Description. There isn't one here. I like bringing down purchased equipment or something, to tie it together. We debited for $10,000. I'm going to debit for $10,000. That's my transaction. Assuming my account had a zero balance, what's my ending balance? $10,000. Okay? If it had a balance, you take the balance from the prior line, you add or subtract the $10,000, and you show the new balance. Really tough.
Would that be the prior month's balance, something like that?
Yes. Yes. And we'll get to some of those in a minute where we'll show one. Or it might be next week, but we'll get there. So, remember we talked about a posting reference, and I said just let it go for a little while? Here's the posting reference, J1. Anybody want to take a guess as to what that refers to? General journal, page number 1. Okay? If this was page 20, that would say J20. Okay? Some of your computer programs, when you use them, this will be called a GJ for general journal. Okay? The posting reference up here, what do you think goes in this one? The account number. Now, the timing is very important. You guys can see that this can become it's very manual oriented, takes a lot of time, there's a lot of labor involved. So typically, one person will do the general journal, and then the duties of posting to the general ledger will get split up amongst multiple people. How do you know when something's done? When it gets posted to the journal, or to the ledger from the journal, that's when you put in the posting reference here and here. So once it's complete, I'm going to carry the 141 up and put it on the appropriate line up here in the posting reference. Okay? Just do it. Calculate the balance. Bring your posting reference up. Good. Okay? Questions before I move on? That's the meat and potatoes of tonight right there. Yes? If you're going to turn off the video, at least watch this far. All right. Remember I said we split this up? We're splitting up duties. So each account, let's talk about old days, right? Everybody uses computers now. In the old days, this was all manual, right? So what you would have is each of these general ledgers would come in its own little book, and it would have the account name and the number on the front, and they'd be stored on a shelf in numerical order or in account order, right? So I'm responsible for account 141 through 150. So I'd go get the book I need, pull it off the shelf, make the entry, go back to the general journal and post the posting reference. Everyone would know that this one is done. Is the cash entry, has it been done yet? The guy doing cash is behind me. I'm in front of him. So you know this is not done. Okay? But each of these would be in its own book, and they're stored in order, right, in account order. And it's always the same order as the accounts in your trial balance or in your chart of accounts, right? Assets, liabilities, owner's equity, revenue, expenses. It's just all about being organized. Questions? Answers? Okay. This was something we talked about briefly a minute ago. We are human, right? We make mistakes. Let's admit it now. I make mistakes all the time. Yes? Good. What happens when you make a mistake? And it will happen. You fix it. Okay? Remember, we're writing all this down in pencil. Do you just erase it and fix it?
No.
No, we don't do that. Okay? There's a little integrity here. If people start going through your records and they see that you've erased a lot of stuff and rewrote, does it look like, hey, maybe something's going on here? Maybe. Maybe not. It might be totally honest and above board. But we want to avoid the appearance that there may be any kind of impropriety. So we don't erase things. So depending on when you catch the error, you'll do one of two things to fix it. If you catch the error, I'm just going to jump through this here. Yeah. Okay, here's the entry. Office equipment cash, right? Have we posted this anywhere? No. If we catch it before it gets posted to the general ledger, we can draw a line through this and write in the correct account name up here. Okay? Cross it out and write in the correct account name. So instead of office equipment, it's shop equipment. Okay? Yes?
I just went over one of the homework things. Can you also cross out the amount if you wrote the
Yes.
amount?
Yes.
Same thing as
So if you wrote 900 here and 9,000 here, it's not in balance. You can cross it out and write in the correct amount. Okay? So just cross it out, write in the correct thing above it. Okay? But you can still, don't get out there with your big black marker and black it out so you can't read it. Okay? We're not redacting things for the government here. Leave it so you can read it. Just draw one single line through it. All right? That gives a good audit trail. It shows what happened and where the mistake was, and everybody can follow it, and it's all cool. Questions on that? And then you just go ahead and go post it to the general ledger accounts like they should be and put the posting reference in here and everybody moves on. Good enough? Good enough? Bless you, sir. Okay. If, on the other hand, a lot of words to say very little. If, on the other hand, we find the mistake now, what's going on here? They've been posted to the general ledger. Do we have a challenge now? Right? Can I just cross it out and fix it anymore? No, it's posted in the book of final entry. Uh-oh, that's bad. So to fix this, you actually have to, oh, you're going to show it on another slide? Fine. You actually have to correct this entry. So if it should be in shop equipment instead of office, write an entry where you credit office equipment and debit shop equipment. Okay? Which is what they're going to show you here. Debit shop equipment, credit office equipment. Somebody's got to now go to the general ledger accounts and post that again to take it out of one and put it in the other and correct it. Bless you.
What date do you use?
The day you actually make the correction. Notice this was September. We didn't find it until October.
You reference it to the...
Yeah. Correct error made September 1 when a purchase of shop equipment was recorded office equipment. Okay? Now I'm going to just throw in a little bit of my experience here. Okay? I have a belief. This is easy. You can do this. There's one debit and one credit. In the real world, you will have entries where there are many debits and many credits. And if you go back and you try and just change one like this, it can snowball on you and become more confusing. I'm a big proponent of taking the original entry and reversing it, just like it never happened, like we did with the return over there, and writing a correct entry and moving on. And just saying, reverse this transaction would be your description, and then here's the correct entry to record so-and-so. Here's why. With one debit and one credit, it's easy to keep track of what you did. But if I have 20 debits and 20 credits, you make one mistake, and then you make a mistake on the correction. Now it just snowballed. It became 10 times worse. Okay? I've literally had this happen. Somebody came to me one day, and they go, well, I had this mistake, and this great big, 20 debits, 20 credits. I made one mistake, and here's the correction. So I debited these for this much, and I credited those to adjust, because it was the amounts and the accounts and all kinds of stuff. And then I figured out part of that was wrong, so I did this correction to that. And part of that was wrong, so I did this correction to that. And part of that was wrong. 11 corrections deep, she comes to me and says, I can't figure it out anymore. Okay? I can't figure it out anymore. And I can't believe she got to 11. All right? Not that she's dumb or anything, but that's a lot. That's tough. We literally went to the whiteboard, drew T accounts, and went through every one of them and figured out how to unwind it and post one transaction to post it all right. It took us 2 hours. Okay, which you can avoid by just reversing the original wrong entry, the whole thing, and doing the new one. So, your choice. Either way will work, but that's been my experience. You had a question?
You answered it.
Okay.
How do you formally reverse an entry?
What you would do is, let's say I want to reverse, not this one, that example, this one. So the reversing entry would be a debit to cash for $9,000 and a credit to office equipment for $9,000.
Basically erasing it.
You just erase it as if it never occurred, and you put in the description, reverse entry so-and-so, correction to follow. And then the very next one is, here's the correct entry saying I corrected. Yeah. Okay? This does work, and as long as you have just one debit and one credit, you can follow it. It's not hard. It's when it gets more complex where you kind of start pulling your hair out.
But you're reversing it after it's been posted. That's when you do the
Yes. So once it's already been posted, you have to reverse and correct.
3 entries then?
If you do it my way, there are 3 entries.
Okay.
If you do it their way, there's 2. Perhaps more.
We like the 3.
Yeah.
Audit trail.
Yeah, I like the audit trail.
Rating comes in.
Mm-hmm.
Wash. It's water.
Yeah. Other questions? All right. I'm done. That's it. Rough night, huh? Okay, questions before we go?
Mini projects?
Yes, let's talk about the mini project. You leave it go. The mini project is a ton of fun. It is, I'm sorry. The mini project, you can probably already do 60-70% of it. It's designed to be cumulative and let you practice all of the things that you learn in chapters 1 through 6. If you go to chapter 6, you go to the back of chapter 6 where the homework is. Just beyond that is mini project. Read through it and start thinking about the mini project. All it really is a great big homework project. Much like, remember the test that we went over earlier tonight where I did all of the transactions and we posted them? You're going to be posting them into general journals and general ledgers, however, and not T accounts. And then you're going to be doing a worksheet, which I will teach you next. And then you'll be doing a trial balance and the 3 financial statements: income statement, statement of owner's equity, and balance sheet. That is the whole mini project. There's just a lot of transactions instead of just, A through O or something. There's a whole lot of them. It will take you 6 to 10 hours. But the good news is right now you have 4 weeks to do it. It's due the night of the second test, which is 4 weeks from tonight. If you want to listen to it, there is a video on Blackboard that talks about the mini project and how to approach it. But what I'd like to cover tonight is just, it's time to start looking at it. So have a look. If you have questions, let me know. But start working on it, because if you wait until the weekend before it's due and try and get it done on a Saturday and Sunday, you're going to hate it, you're going to hate me, you're going to hate yourself. Okay? Because it's going to take a little bit of time. You're free to do it on whatever kind of paper you want. Line paper, graph paper. Hopefully you're going to use a ledger pad. If you get on Blackboard and on the main page there's a mini project templates. I've created an Excel spreadsheet with all the lines and things laid out for you. You can feel free to download that. You can do it right into Excel. So you're typing it in and getting it to do all the math for you. I didn't set up the formulas, so you're on your own for the formulas. But you can type it all in there and just print it out and turn it in that way. Okay? Feel free to work on it in groups, but I do expect you to each turn in your own unique work. Okay? I've had a couple people in the past take my Excel template and 2 or 3 guys do it together and then just change the names and turn it in. No, not going to fly. I found out, and because Excel will tell me. Besides, the 3rd guy didn't change his name on it. Yeah, not real smart. That's exceptionally lazy, if you ask me. And the other thing is, I'm here for an hour before class. I'm here at 5, and if you want to, come in early and ask me some questions or bring it to class and ask questions, I will help you through it. I won't just give you the answer, but I will help you through it. Okay? Question?
Is this mini practice set number 1?
Yeah, what page is that on?
186.
Page 186. Okay?
And is just next week chapter 4 homework we're going over?
Next week is chapter 4 homework, and then I'll lecture chapter 5. Next question, yes?
Just to confirm that I could just copy these on the...
You can pull those pages out, you can copy them, you can do whatever you want. Okay? Next question. Yes?
If we do the general ledger,
Yes.
each of those would technically be on a different page. But if we're doing this in Excel, is it okay if we just label all of them appropriately?
Yeah, and I set them up where there's little blocks of general ledger stuff, and they're not much longer than, you're only going to need 4 or 5 transactions in each one. So they're like 10 or 12 lines long. And you can get 3 of them on a page sort of thing. Yeah. Okay. Other questions? All right. Thank you. You may turn that off. Unless there's other questions.